So the company received its last round of funding in 2011, that was 12 million, and it has been almost 2 years since then. So would you take us a little back that since then till now, how has the journey been and how has the company scaled up since then?
Right. So I think a couple of important milestones that we have captured in the last 2 years. The most important one for us is that we started the domestic remittance business in the middle of 2011, and we were the first players actually to come into a business model which is the cash to the bank business model, where we are enabling the unbanked and predominantly the migrant populations to remit cash back to their villages or to their families by walking into any of our Suvidha outlets, and this money gets remitted to their beneficiary's bank account in an hour when it used to be through the NEFT. And in the last few months, we have also integrated through the IMPS platform, where now it enables people to send money in less than a minute. So you have actually the people walking into our outlets to remit cash, and at the other end, at the beneficiary's end, they have the family members or friends who are standing there at the ATM or even at the bank branch to instantly collect the cash there. So that's been an important product for us and an important category that we have, that we had launched in 2011. And since then, we are probably one of the largest private players in the domestic remittance space, outside of the public sector banks, which are also, which offer this remittance product. We hope to see, growing in this business at least 2 or 3 times as we, progress in the months to come. So since the funding, since 2011, the remittance business has been one of our key milestones. Apart from that, we have grown our outlet base. We keep continuing to add about 1,000 outlets every month. Okay. So if you look in the last 24 months span, we would have added about 25,000 outlets. And the idea is to keep penetrating across the width and breadth of the country and to bring the convenience closer and closer to the doorstep of the consumers. So we continue to look at several more products, several more categories which we feel are promising. But to highlight, I would say that these have been the 2 key milestones for us. One becoming the largest private player in the remittance space, and number 2 is increasing our footprint across the country. Right.
So which segment gets you the maximum traction or revenue amongst all your products?
Right. So it's an equal split. So the remittance contributes to about 50% of our volumes, and the rest of the categories, be it travel, the recharge business, the insurance, bill payments, utility bill payments, they contribute to the rest of the 50%. So the split is between the remittance business and the rest of the businesses, but it's an equal split at this point of time.
You said you're doing approximately 250 crores a month.
Right.
So is that only the remittance business, and what is the overall top line of the company at present, and how do you see it going forward?
Right. So we are at a current run rate where we're doing about 3,600 crores on an annualized basis. Okay. And as I said, it's a split between the remittance and the non-remittance business. We are seeing growth in some of the other categories too, especially as we add more service providers on board, be it the utility service providers or for that matter the insurance companies which come on board, and this is an ongoing effort from our side. Our promise is that when a consumer walks into any of our stores, he should have the flexibility of paying any kind of bill or any kind of insurance premium or do any kind of recharges there at our store. So we would like to become the largest supermarket for services, and that's our vision. Right.
So how much was just the remittance business, say in 2011, if it is 50% now?
We started the business in 2011, so okay, from 0 to 250, okay. It's been a great journey for us.
Is it because you see the non-remittance like growing slower, or is it just that the scale of the business is increasing and hence both the segments are growing?
Right. So both segments are growing, but I would say the remittance business is growing faster than some of the other businesses. And the reason for that is that you have multiple alternatives available today in the market. For example, if you want to do a recharge, You have the traditional channel from the telecom operators, which have a larger presence than us. So some of those will continue to grow a little bit more slower because those are more mature in terms of the categories. But we feel that there are certain other emerging opportunities that we're looking at within the financial space, and our interest lies in going after some of these nascent markets and being a first-time mover and capitalizing on those opportunities. Whereas the travel, the recharges will continue to remain and they will grow. But in terms of pace of growth, we would expect some of these new categories under the financial services space.
Like?
So this would be like the remittance.
Okay.
And within the remittance, we're looking at various other models which should come in. Today, we're doing the cash to the bank, using the Aadhaar going forward. There could be other interesting models that could, come across. People are talking about the micro ATMs, for example, right? So these are opportunities that we are keeping our eyes and ears open. And as and when the market is mature enough, we would like to leverage and capitalize on these opportunities.
Okay. And also, in the present times, that considering the consumer is becoming so smart, mobile usage is increasing. In metros, we are doing web check-ins. We've become very smart as consumers. Do you see, like this question has two parts, do you see that tier 2, tier 3 cities have more opportunity for companies like you? Or do you see that in metros, your business model could evolve into something different in the near future?
Okay. So, we look at the consumer segment in two parts. One is the evolved set of consumers, and then there's the non-evolved. The evolved basically is the 140 or 150 million who are today online for various purposes, and of which probably only 20 million are transacting. So there is the billion plus population which still today is not online and still needs basic non-discretionary services like the ones that we offer. So we believe that at least for the next 6-7 years, the assisted internet model is here to stay. Secondly, we are predominantly a cash-driven economy. We still like to pay by cash, and that is about 90% of our economy still runs on cash. So we offer cash payments at each of our outlets.
Yes.
So a combination of the consumer behavior, which is typically the non-evolved consumer segment, and given the fact that it's a cash-driven economy, both these two blend together and make our business model far much more stronger from a fundamental perspective. And we believe that this is going to remain the same way for the next 6-7 years. But having said that, we wouldn't want to ignore the evolved set of consumers too. And in our business plan, we are looking at some point of time talking directly on a B2C model too, to the evolved set of consumers also, right?
Okay.
So that way, I think we would like to be in both the brackets, but we believe the larger opportunity will still be in the assisted internet model.
How many of your stores are in smaller towns at this point?
Yeah, so we would be about 70% would be in the top 60. I would say metros and the tier 60,
Okay.
and the balance 30% would be in the tier 2 and tier 3 towns. When we started off, since it's an internet-driven technology model, so we had to go through the typical learning curve, and typically the metros and tier 1s, you have the internet penetration far much more well covered than the tier 2 and tier 3. But I think now with the telecom coverage fairly decent across the length and breadth, I think connectivity is no longer an issue for us.
So for the next 12 months, what is the plan, Suvidha, in terms of expansion?
Right. So one, we are looking at increasing the presence across the country. Today we are at about 65,000 outlets. Our aim is in the next 12 months to get to 100,000 outlets. And therefore, as I said, predominantly we are in the tier 1 and the metros. We would like to start seeing our penetration getting deeper in the tier 2 and the tier 3 towns. And we believe that we have a very strong value proposition, given that some of these services still are a pain point in terms of accessibility in the tier 2 and tier 3 towns. And that's where we see a large opportunity emerging for us. A lot of these service providers or the partners with whom we work with are very keen in terms of delivering this convenience in the smaller towns, and that's where they see a large benefit in terms of partnering with Suvidha. So they ride on our distribution strengths to reach out to consumers which are beyond the metro cities. And we hope that with this kind of presence and the acquisition that we're looking at in terms of the points of presence, will deliver a lot of value to our service partners, as well as help us reach to several more millions of consumers through the presence that we're trying to create.
So you plan to maintain the pace of 1,000 outlets
About
a month?
A month, yeah.
Yes.
So we will obviously step up, and the idea is, as and when opportunities across regions open up for us, we will go aggressive in terms of opening up these retail outlets. So for us, if you look at the landscape of the of the retail space in India, you have about 10 million retail outlets. We are still at about 65,000. So for us to go out and capture several more retail outlets, we don't see that as a challenge. What is important for us is to have a great value in terms of the product, which the consumer sees great benefit, and our service partners see a lot more value in the distribution and the technology that we are building.
Okay, and what about the margins in this business?
Yep, so it's a high volume, low margin business. So the way it works is like typically a marketplace model. The more throughput that goes through this entire system is where you make your monies at the end of the day, right? So the idea is, how do you keep increasing the transactions, either by cross-selling, upselling to the same set of consumers, or by onboarding newer services through which you can attract a newer set of consumers to come on board. But it's all about a volume game, and we believe that once we reach sizable economies of scale, where again the partners and the consumers see value in our business model and the distribution strength that we bring, there are opportunities to bring in higher margin services too. So right now the concentration is in terms of increasing the distribution, and therefore getting more closer to the end consumer.
So by when do you expect to break even in this?
We are very close to break even, and I would say it's probably in the next 1 quarter or 2 quarters we should be there. Right?
Also considering the scale of your business, which is 3,600 crores, there are two options that the company could have right now, for further expansion. One is a PE round, another private equity, which could also be a secondary transaction. And considering that you've already reached this scale, you could also look at an IPO. So how do you look at both of these options, and what is your outlook towards them?
Right. So firstly, at this point of time, we are, from a capital perspective, we are in a very comfortable position. We really don't need to go out and raise an additional round. And given our business objectives, I think we are well funded for at least the next 18 to 24 months. But having said that, the market dynamics are fairly evolving, and we are in an environment which is fast developing. So there are a lot of opportunities which are emerging, and these could be round the corner and could be, we could see these emerging really fast. There could be certain opportunities in terms of inorganic growth, where if we feel that the opportunity is right and the fitment is right, we may then look at getting external funding to actually fund some of the acquisitions. But having said that, for our organic growth, I think at this point of time, we are fairly well funded.
So what kind of an acquisition would fit into Suvidha at this point?
It could be, it could be either in terms of somebody who already has a large points of presence, and that kind of complements the existing base that we have.
Similar profile.
A similar profile. Or it could be a technology player which can open up a new business model for us, right? So we are looking at a new product which can complement the existing system that we have, and maybe open up a new category of services too. So predominantly we are looking at any player within the industry which can catapult us 2 times or 3 times the kind of size that we are today.
Okay. So how much scale would you expect such an acquisition to add?
So Difficult to say in terms of numbers, but the way that we look at it is in terms of category leadership. So today we are probably the category leaders in the remittance space, and by inorganic growth, if we can become category leaders in 3 or 4 other services, I think that's where the value comes in terms of the inorganic growth. So we look at it in terms of market leadership, and the market leadership would come in terms of either services where we become category leaders, or in terms of the sheer size of the presence that we have. That puts us in a very sweet spot in terms of the kind of outlet reach that we would have created.
And what about thinking of an IPO?
It's a little too early. I think we have a hands full in terms of growing the business, several X's in the next 24 months' time. The important milestone for us from a financial perspective is to get to the break-even point, which I said is probably a quarter away. And from there on, it's about ramping up the growth. We would probably look at an IPO probably 18, 24 months down the line, when the markets obviously are far much more attractive, and we have a bigger story to go to market with. But right now, it's all about execution as per our business plans.
And how many employees do you have in the company?
We have about 250 employees, which is partly, we also have our own feet on street, but they are on contractual roles, and that will be about 50, 60 employees which are on the roles of the distributor but managed by us.
At what rate has the top line been growing? How do you foresee it for the next financial year?
Right. So we've been growing in the last 2 years at 2x every year. So we've been doubling our top lines every year. We hope to continue the trend at least for the next 2-3 years. And the reason why we believe that that's very much possible is because of the several opportunities that are emerging. And we feel that these opportunities will help us in terms of helping us grow 2 times or 3 times in the next 2-3 years, right? And within the existing businesses also that we are in, we feel that the opportunity is far much more larger, and therefore we are extremely comfortable in saying that we should be growing at least 2x for the next couple of years.
So correct me if I'm wrong, so it's in the next 12 months, internal accruals are pretty much there, or the funding that you received is there to expand.
Right.
And only then you would have clarity whether you are looking at a next round of funding,
right,
or is it an IPO,
right,
or you need external funding for an acquisition.
Right, right.
So till then, and how many stores would you be reaching by in the next 12 months?
Yeah, so we hope to get to 100,000 stores in the next 12 months.
Okay.
That's the aim. And as I said, we should be ramping up as and when we onboard newer set of services, which will help us in terms of increasing the penetration across geographies. So that's the aim, to get to the 100,000 outlets in the next 12 months. We are, fairly strong in the west and the north, though we have presence in the south and east. But these are emerging geographies for us. So we do feel that within the existing north and west, there are still white spaces for us to go out and capture. And south and east, as I said, is still untapped, where we feel there's a larger potential for us to increase our presence. And even the non-metros, as we spoke about, the tier 2 and tier 3s, I think there's immense potential for us to have our presence. And we do believe that once the metros and the top 50, 60 cities are well penetrated, the growth is going to come from the tier 2 and the tier 3 towns. Right.